Morning, students. Once again, I'm here to discuss one of the asset-based standard of your financial reporting curriculum. So I am going to talk about Ind AS 40 investment property. So student, first of all, this investment property standard, right? So let me give you the standard in different scenarios. I mean to say in IGAP, Ind AS and IFRS. In IGAP, there was no such standard for investment property. Although accounting standard 13, accounting for investment was there, which touches the portion of investment property, but there was no specific, no separate standard on investment property, right? In AS 13, there was a concept which was given for investment property. That's all. In Ind AS 40, there is a separate standard. In AS, there is a separate standard. In AS 40 on investment property. In IFRS, there is a separate standard on investment property, which is IAS 40, right? If I talk about investment property, just going by the name, what do you think about this thing? Investment property, right? So we have heard about so many investment in mutual funds, investment in equity shares, investment in gold, investment in bonds, right? We heard about so many investments. But why this investment property standard is classified as a separate standard, right? What do you mean by investment property and how this investment property is different to the other investment like investment in mutual funds, investment in equity shares, investment in bonds, investment in corporate deposits or corporate bonds, right? If we will see these two words, investment property, so it means investment in property. Investment in property. What do you understand by property? Will you say that my mutual fund, if you have bought a mutual fund, will you say that, I have bought a property? Will you say that? Of course, answer is no. If you have invested in equity shares, will you say that I have invested in property or I have purchased a property? Answer is of course no. But if you purchased a land, will you say that I have purchased a property? Will you say that I have purchased a property? Yes, yes. If you have purchased a building or a flat or a residential house, will you say that I have purchased a property? Of course, answer is again yes. So friends, it means this standard talks about investment in property, right? So by the title, one thing is very clear in mind that this standard talks about the investments in property. And that is why this standard talks about the title is investment property. Okay. So one thing is very much clear in our mind that how this investment property means investment in property is different from other investments, right? And that is why there is a separate standard, investment property standard, which takes care of investment in property, right? Okay, let's move on and we'll discuss more and more about this standard. Friends, like other standards, in this standard, again, we have agenda. And when I'm talking about agenda, of course, I'm going to talk about the objective of the standard and scope of the standard. The most important part, like when we started the PPE standard, right? We started with the definition that what is a PPE and how many of you are able to remember the definition of PPE? Tell me. And I've spent around 10-15 minutes to make you guys understand that what is the definition of PPE. Tell me how many of you are aware about the definition of PPE? How many of you are aware about the definition of intangible assets? So likewise, in this standard as well, I'm going to discuss the definition of investment property because the definition plays a very important role to understand the entire standard, right? And this definition also gives you a classification, right? A same building could be a PPE. A same building could be a investment property, right? A same building could be a non-current asset held for sale. So building is there, right? The nature of the building is same. But just due to the usage of the building, just due to the intention to use that building, the classification of the building got changed in the books of accounts, right? DLF, for example, if a company is using the building for its own purposes, for business purposes, it's like a PP. If DLF is using the building for sale purposes, it is like inventory. If another company is using this building for the rental purposes, it is an investment property, right? If TCS wants to sell that building, it becomes a non-current asset held for sale under Ind AS 105. So building is same, building तो वही है, लेकिन बिल्डिंग का जो यूज है, उसकी इंटेंशन टू यूज, उसका इंटेंशन टू सेल, उसकी वजह से, इंटेंशन की वजह से, यूज की वजह से उसका क्लासिफिकेशन चेंज हो जाता है. द क्लासिफिकेशन इन द बैलेंस शीट विल चेंज and it will be covered into the different standards, right? So friends, that is why the definition is very important. To understand the meaning of that part is very important, so that you will be able to understand whether this will come here or this will go somewhere else. Owner occupied property. We'll discuss the concept of owner occupied property as well, but you already have read this owner occupied property relating standard in detail in the last two sessions, right? So owner occupied property is nothing, it's a property, plant and equipment. There is a new name here, so property, plant and equipment. So we'll talk about owner occupied property as well. Recognition. If you are investing in a property, if you are buying a property, then when it has to be recognized as a part of the investment property. So we'll discuss about the recognition condition. You remember, while discussing PPE standard, I have taken an example of a machinery which the company was imported from China, and the government has banned the output from that machinery. And that is why, since the government has banned the output of that machinery, and that is why what happened? The company was not recognizing that machinery as a PPE. Why? Because the future economic benefit was not expected. So again, we'll discuss the recognition criteria here as well. When a company is investing in investment property, when the company is investing in properties. Measurement. We'll speak about the measurement part also, that at what value the investment property is initially and subsequently measured in the books of accounts for the purpose of recognition. Transfer and disposal. One of the new concept is there in investment property again. Transfer and disposal. The transfer part. For example, today you have an investment property and tomorrow you want to sell that investment property, right? Today you have an investment property. So let's say your investment property is getting transferred into PPE, property, plant and equipment, or your investment property is transferred into inventory. That how this transfer will happen, I mean to say more from the accounting perspective, not from the legal perspective, from accounting perspective. And at the last, we have a disclosures and the key differences. Okay. Let's move on, friends. Coming to the objective. The objective of this standard is to prescribe the accounting treatment. Again, when I'm talking about accounting treatment, what am I talking about? Am I talking about only accounting entries, or I am talking about the four pillars of accounting, which is RMPD, or I am talking about the four pillars of accounting, which is RMPD? Recognition, measurement, presentation, disclosure. You are right. I am talking about the four pillars of accounting, which is recognition, measurement, presentation, disclosure. Okay. Recognition, measurement, presentation, disclosure. Very good. So I am talking about the accounting treatment of investment property and related disclosure requirement in this particular standard. So this particular standard talks about the accounting treatment for investment property. Do you think why the accounting treatment for investment property is important, right? And why it is covered into a separate standard? Can anyone tell me why this investment property is classified into a separate standard? It has been classified as a separate item. And just to give you a thought, The investment property is land and building, right? Land and building. Only two items are covered here, land and building, which is held for rental or held for capital appreciation. Friends, this investment property is a very unique item. And I'll explain this with the help of the real life example. Let's say, Munish has purchased a car. Okay. So Munish has purchased a car. And due to some reasons, Munish is not using the car. Okay. So he has spent 10 lakh rupees in buying a car, and the car is still lying in the godown. Okay. So the life of the car, whether Munish will use the car or he will not use the car, the life of the car is limited. Yes or no? Will you say that, sir, since Munish is not driving the car and hence the life of the car is not limited? Whether life of the car is limited or not, life of the car is limited. It will, the life will expire in the next 10 years or in the next 15 years. Right? That is number one. Number two, even though he is not using the car, still the car will get depreciated. The value of the car will go down. Yes or no? Yes. Right? Number three, if Munish is not using the car, his battery of the car will go down. Of course, yes. Eventually, after a year or 2 years, his car battery will be scrapped and he has to replace the battery of the car. Number two, his engine will also frozen. His engine will stuck. His engine will freeze, right? So if he'll not use the car, because the engine also demands the service, right? Engine also demands the friction. Engine also demands that it should run. Okay. The greasing should be there. The oiling should be there. The oil which is there in the engine, if the engine is not used, probably that oil will also, become a bad oil and engine will also get stuck. Right? Probably after 1 or 2 years, when you open the door, this door may be jammed. Okay, maybe. So the point here is, car is like an asset. When even if you're not using the car, it is getting impaired, it is getting depreciated, it is getting impaired, right? So if you will not use the car 15 years, you will not say that I never use the car and I bought the car at 10 lakh rupees. So I can sell you this car at 8 lakh rupees. Answer is no. Even after 15 years, this car will go as a scrap. Now, if I talk about same thing for land, whether it is good, if I talk about the same thing for the land, again, so Munish has purchased a land also. And he has just bought a land at the rate of rupees 10 lakh, right? And this land was there in near to this Greater Noida. So we know that, Mr. Modi has announced a Jewar airport, right? So there is an international airport which is coming into the Jewar, right? So after Greater Noida, and he bought a land, and that land is just like a jungle land, okay? But he know that the airport is coming, and the value of this land is probably, multiply by 10 times or 15 times in the next 5 to 10 years. So if he is not using the land, why? Because the land is just in the remote area, it is just like a jungle. He has just bought the land, he is not using the land. Whether the life of the land is limited, whether the life of the land will go down, whether the value will be depreciated, answer is no. So like a car, he has invested 10 lakh rupees in a car, and after 10 years, the value of this car is not 10 years, is not 10 lakh. The value of the car may go down like 50,000 rupees or 1 lakh, right? But if I talk about the same time investment in the land, after 10 years, what do you think? This 10 lakh become 50,000 or this 10 lakh may become 50 lakh? I'm talking about the general scenario. I'm not talking about, sir, government has, banned the government has banned the, transfer of the land. So let's say कैन से दैट कि सर वो एरिया गवर्नमेंट ने बैन कर दिया कि आप ट्रेड नहीं कर सकते, आप बेच नहीं सकते. सो वेरी यूनिक सिनारियो, तो वो हम रिकॉग्निशन में कवर करेंगे. बट इन ऑल जनरल पार्लेंस, what happens with this land after 10 years? Is it this 10 lakh become 50,000, or there are high chances this 10 lakh become 50 lakh? There are high chances that this 10 lakh will become 15 lakh. At least this 10 will not be 10, with all guarantees and all probabilities. Right? All agree with me? All agree with me or not agree with me? Agree with me? Right? Same thing goes for building as well. Although in the books of accounts you will depreciate the building, but actually the value of the building also appreciate. When the value of the land appreciate, the value of the building also appreciate, right? Value of the building also appreciate. So Munish is saying, sir, because supply of land is limited, as such demand will increase and so price. You are right, Munish. So friends, the same time when I'm investing in a car and when I'm investing in land and building, so you can see that the feature, by the nature of this asset, the feature is different. Okay. And that is why there was a requirement of putting a separate standard which takes care of the accounting, presentation and disclosure part of investment property, so that user will get the right picture that how this company is doing, what is the financial health of the company. And that is why this investment property is classified as a separate standard, and this standard talks about the accounting treatment of investment property, right? So let me talk about the scope of this standard. This standard is applicable in the recognition, measurement and disclosure of investment property. This standard does not apply to biological asset, of course, yes. But why specifically this standard gives you the scope exemption of biological asset? For example, there is a tree which is attached to the land, right? There is a tree. Of course, tree will grow on the land, right? So that you will not draw any reference or any connotation that, oh, if land is an investment property, then tree is also an investment property. Tree is not an investment property, right? Mineral rights and mineral reserves. Again, so these mineral rights and mineral reserves are coming from the extraction of the land, coming from the digging the land, excavating the land. So again, this is not part of the investment property. This is covered under the separate standard, okay? Which is 106 probably. Understand, friend? So now let's come to the definition of investment property. Investment property means property, land or a building or part of building or a both held by the owner or by the lessee as a right of use asset to earn rentals or for capital appreciation or both, rather than for use in the production or supply or sale in the ordinary course of business. Sir, didn't understand anything. Very good. So let me simplify this definition, and I'll simplify this definition into two parts, right? I'll explain this definition into two parts. First of all, from the memory sake, always remember this standard covers two assets for two purposes. This standard covers two assets for two purposes. What are those two assets? What are those two assets? Mufita, what is those two assets? Anisha, what are those two assets? Raj, Ansa, Selesh, Munish, Yukta, Rahul, Ridhima. What are those two assets which is covered here? Land and building, right? It could be land and building. It could be land or building. Okay. Or it could be a part of a land or part of a building. Simple. But technically it is land and building. Okay. Land, building. These are the two assets. Held for two purposes. Land and building, two assets held for two purposes. What could be the two purposes? The two purposes is held for rental or capital appreciation. What are the two purposes? Held for rental or capital appreciation. Held for rental or capital appreciation. Do you remember that PP definition? When I talked about the PP definition, I have given you one exemption. I have given you one exception or one exemption. Do you remember the definition part? So I have explained that PP are tangible item. which is held for use in the production or supply of services, or held for rental purposes, or held for administration purposes, and which has to be used for more than one period. Do you remember? I have given you one exception, and that exception I have given you for the land and building, that if the land and building is given for the rental purposes, it is not a PPE. So if it is not a PPE, then what it is? It is your investment property. So friends, always remember two assets for two purposes. Two assets for two purposes. What are those two assets? Land and building held for rental or capital appreciation is considered as an investment property. Simple. All okay? All agree with me? Land and building held for capital appreciation or rental purposes is considered as an investment property. So, if the company has purchased a building, right? And the company has purchased the building for the purpose of earning rentals. The company has a spare funds, and that is why the company has purchased the building. And now the company wants to hold this building so that the price will go up. And in the meantime, the company has given this building on for the earning rental. So the company has leased the building for purpose of earning rental. So in that case, of course, it is your rental purposes. It is held for rental. So this will be investment property. Or the company has a spare funds. The company has purchased the land, and the company has just purchased the land and just left it for the purpose of capital appreciation. Okay, because the company is expecting that yes, this international airport will build in the next 10 years, and of course, in that case, the prices will shoot like anything. Okay, so friends, in this particular case, this land is held for the capital appreciation purposes. No any rental is coming. The company has not leased out to anyone. So in that case, this land is just available for the capital appreciation, that when the capital appreciation will be there and the price will go up, then the company may sell the land. So in this case, this land and building held for capital appreciation or held for rental purposes is considered as an investment property. Sir, if the company has given its crane, or there are companies which has purchased the luxury cars, and they're giving this luxury cars on a rental basis. So where these cars and where these cranes which are purchased and which are given on a rental basis. So where this car and where this crane will come, is it an investment property if it is held for rental purposes? Is it an investment property if it is held for rental purposes? What is your view? The objective is to earn rental. What is your view? Rahul is saying no, sir. Only land and building will be an investment property. Very good. So if it is not an investment property, where it will go? My question is, this car and this crane, which the company is giving on a lease basis, giving on a rental basis. So where the car and crane will be classified in the balance sheet? कहाँ दिखाएंगे balance sheet में? Is saying PPE. Yes, it is PPE, property, plant and equipment. It is property, plant and equipment. Okay. So that is why in the PPE definition, one of the intent or objective was held for rental as well. Okay. So when I'm talking about held for rental, I'm talking about other than investment property. I'm talking about other than land and building. Okay. So land and building, which is held for earning rentals or held for capital appreciation, is considered as an investment property, right? Rather than for use in the production or supply or for sale in the ordinary course of business. You have heard about Supertech, you have heard about DLF, M3M, Godrej Properties. Have you heard about these companies? These are the real estate companies, Hiranandani Group. These are the real estate companies. So these real estate companies are constructing building or are acquiring building for the purpose of sale, okay, for the purpose of sale or for the purpose of earning rentals. So in this case, whether those buildings or those land will be classified as an investment property or will be classified as an inventory. Tell me, what is your answer? Whether these land and building will be classified as an inventory or it will be classified as a investment property. So the objective of this company is to earn rental or earn a profit by selling these assets in the ordinary course of business. In the ordinary course of business, right? It is not investing. It is the bread and butter of this company is to earn by way of selling these inventories, by way of selling these assets, by way of selling these properties. Okay. So these properties are not investment property or not PPE. These properties are like an inventory for this company, right? So it is not a PPE, it is not an investment property, it is an inventory. Munish, Mansa, Mufita, and Rahul, you all are right. It is a inventory, right? So friends, a same asset can take so many colors, right? And And a same asset, how will you be aware of, sir, whether it is an inventory, whether it is a PP, whether it is a investment property, whether it is a non-current asset held for sale? It depends upon the intent and it depends upon the usage. It depends upon the use, not usage. It depends upon the use, right? So, like in this case, the intent is to sell in the ordinary course of business, right? But if the company has a spare fund and the company has invested in property, right? The company has invested in property means it is more from the long term perspective where the company wants to have a capital appreciation, right? Have a capital appreciation because the company is not selling in the bulk. But if I talk about the real estate companies, they are creating a society, they are selling thousands of flats, right? So their intent is to sell in bulk, and that is why they need to rotate the money. So even they got the lesser profit, they will sell and they invest in the other, and again they will sell. So they will make money from first whatever money they have spent, they will just rotate the money into the business, right? Second example, the company has purchased a building and the company is running its office from that building. Is it an investment property? The value is appreciating. Of course, value तो बढ़ेगी ना. तो क्या वो बिल्डिंग जिसमें कंपनी अपना ऑफिस चला रही है, is it a investment property? If no, why no? And if no, then it will go where? My question is, a company has purchased a building for the purpose of running its office from that building. So my question is it an investment property? If your answer is no, then what is the reason behind it? And what should be the classification of this building? I'm waiting for the answer, guys. Salesh is saying PPE. Okay. So Salesh has given the answer of two questions. Number one, I have asked, is it an investment property? And if no, what is the classification? He said it is not an investment property, it is a PP. But why? Why it is not an investment property? Because it is not held for earning rental or held for capital appreciation. It is held for administrative purposes. It is held for use in the production or supply of goods and services, or it is held for administrative purposes, right? Right. And that is why it is not an investment property. It is a property, plant and equipment. Abdul is saying, sir, since it is using in the production, that is why it is PPE. Yes, Abdul, if it is used for the factory purposes, production purposes, again PPE, or even though if it is not used for the factory purposes, but it is used for the running the office. So it means it is getting used in the business. Okay. So it is used for the administrative purposes and hence it is PPE. The intent is not to earn rental or the intent is not to get the money out of the capital appreciation. For example, if the company has purchased a building and the company has installed factory, or the company has purchased a land and the company has installed a factory or a plant on that land. So the intent of the company is not to have a capital appreciation from that land. The intent of the company is to grow the business, right? These all big companies like Tata Steel, Tata Motors, Jindal Steel and Power, Reliance Industries, they have big acres of land on which the plant is there, right? So probably these companies have purchased this land 100 years ago, 50 years ago at a cost of, let's say, 10 lakh rupees or let's say 1 crore rupees. Today, the value of those land is more than thousands of crores. So the capital appreciation is like 1,000 times or 2,000 times or 5,000 times, let's say. So will these companies sell this land? Answer is of course no, because there are big plant. The societies are there on those land, right? The society for the employees is there, the factory employees is there. There is a big setup. So the intent is not to earn a capital appreciation from that land. Rather, the intent is to grow a business and make money out of that business, out of that plant which is installed on the land. So that land is held for use in the production or supply of goods and services. Right? So friends, I hope this is very much clear to you that land and building, if it is held for capital appreciation and held for rental purposes, is considered as an investment property, right? Rather than for means, what is the exception? If that land and building is used in the production or supply of goods and services, it is not an investment property, it is PPE. Or land or building is held for sale in the ordinary course of business, again, it is not an investment property, it is not a PPE, it is an inventory, right? Sir, this part we have understood very well. I hope it is clear in mind. I have taken so many examples to explain this. I hope that this is clear in mind. Let me know, guys, if any of you is having a situation where it is clear out of mind. Viraj is saying, sir, though property is held for office purpose value, or properties tend to grow, whether held for business purpose or held for capital appreciation, why it should be classified as PPE rather than investment property? Viraj, just now I've given the example of these big plants, right? Big companies who have installed their factories on the land. Of course, the value of the land has gone down multiple times, manifold, 1,000 times, 5,000 times. But what is their intent? That is very much important, right? So Viraj, for classification of the asset, the intent is very much important, right? The use is very much important. That how you use that asset, that is very much important, right? If that building is lying idle and you are not running your office, in that case, yes, it is an investment property, and this example is given in the standard as well. But if this building is used for the office purposes, it means the company is using that infrastructure for earning its bread and butter on the daily basis, right? So in that case, for example, if you have a shop, okay, if you have a shop, in that case, if even the value of the shop will go up, right? Will you sell this shop? Of course, answer is no, because you have a reputation in that locality. You have a fixed customer in that locality. So you want to earn money from your business, not only from shop, right? From your business. Okay. You have a goodwill, you have a reputation, you have a fixed customer base, right? People knows you in that locality. So basically you want to grow your business. And of course, business requires some asset, some fixed asset, some existing asset, right? So what is your nature and what is your intent and what is the use of that asset? The use of the asset in the business, okay? And what is your intent? Of course, your intent is not to earn money by appreciation in the value of the shop. Your intent is to earn money by selling more and more goods from that shop. Am I right? Am I sounding right, guys? विराज, is that clear? अगर आप उसमें लेट्स से अगर आप उस शॉप में अपना बिजनेस चला रहे हो और मार्केट प्राइस एकदम शूट अप हो गया, क्या आप इमीडिएटली शॉप सेल कर दोगे? ऑफ कोर्स आंसर इज नो. बट इफ दैट asset is lying idle, the property is lying idle, and the money has shoot up and the value has shoot up, will you be able to sell? Of course yes, because your business will not be impacted, nothing will be impacted, right? There was a old saying, एक बहुत पुरानी कहावत है, there was a old saying, and probably you guys have heard this saying from your grandparents or your from parents. They say that that the residence or the flat or the building in which you are living, आप जिस जगह पे रहते हो, राइट, वेयर यू आर लिविंग, उसकी कभी वैल्यू नहीं होती. फॉर एग्जाम्पल, यू हैव वन हाउस, यू हैव वन पेरेंटल हाउस वेयर यू गाइज आर लिविंग, राइट. अगर वो घर 5 करोड़ का हो गया, आपने 10 लाख का लिया था और वो 5 करोड़ का हो गया, दिस 10 lakh property has become 5 crore rupees. Will you sell? Answer is no. So that is used for your residential purposes. That is your house where you are living, right? कहते हैं जिस घर में आप रहते हो उसकी वैल्यू नहीं होती. So the point is more from the intent. You need a house to live, right? And not to trade, not to earn money by selling that house. And that is why it depends upon the use and it depends upon the intent. Friends, now we understood this fact that land or building held for capital appreciation or held for rental purposes rather than for use in the production or supply of goods and services or sale in the ordinary course of business. I have already spent 15 minutes on this definition. Still, I have not completed, right? So why I am putting so much pressure and time on this definition alone? This standard is a very small standard, very short and sweet standard, I would say. So what is important? This part is very much important, which you need to understand it very carefully. In the standard, in the definition, it is written that or land or building, okay, which is held by the entity, matlab which is acquired by the entity or held by the owner, or by the lessee as a right to use asset. So this land and building held by the owner, which is very much clear. If I have purchased the land and building, I am the owner of this land and building, right? Or by the lessee as a right of use asset. Sir, what is meant by this right of use asset? Friends, you guys are not aware about Ind AS 116, right? Ind AS 116 is still going to be covered, right? So just I am giving you some thought on Ind AS 116. I'm not teaching you Ind AS 116. I'm just giving you a thought on Ind AS 116. And please let me know if my Excel file is visible. Is it visible? Investment property. Definition. Right? So what is the definition? Land and building held for capital appreciation and rent is equal to investment property. Right? Exception. What is the exception? Exception. Land and building held in business purposes or held for trading purposes in the ordinary course of business will be classified as Ind AS 16 and Ind AS 2 respectively. Means held in business purposes will be PP and held for trading purposes in the ordinary course of business is inventory. Okay. Yeah. So land and building held for capital appreciation in rental is considered as an investment property. Now this land and building can be now land and building can be held in two ways, right? What are the two ways? Number one, so land and building can be taken in two ways. Number one, purchase land and building. So in case of a purchase, the company will become the owner. Right? Number two, acquire, not acquire, take on rental basis, that is lease, take on lease basis. In that case, this company will become the lessee. Right? Clear? दो तरीके से ले सकते हो, या तो आप खरीद लो या आप रेंट पे ले लो. आप घर में भी तो ये करते हो ना, या तो आपका अपना मकान होता है या आप किराए पे रहते हो, राइट? सो ईदर यू आर ओनर ऑफ दैट प्रॉपर्टी और you lease is covered under Ind AS 116. Okay. So what this lease standard says that lessee, right? If lessee acquired an asset, so there are two parties, lessee and lessor. So if lessee acquired an asset, let's say I'll write here, A Limited acquired a building on a lease basis at the rental of 1 lakh for a period of 2 years. A Limited acquire a building on a lease basis at the rental of 1 lakh for a period of 2 years, right? So in that case, friends, Ind AS 116 says that there is no concept of, from the lessee perspective, there is no concept of finance lease and operating lease. You guys have heard about AS 19, Accounting Standard 19. In Accounting Standard 19, you guys have heard about there is a concept of operating lease and finance lease both from the lessor perspective and the lessee perspective. But in Ind AS 116, from the lessor perspective, from the lessor who is giving the asset, from the lessor perspective, there is a concept of operating lease and finance lease. From the lessee perspective, there is no concept of operating lease and finance lease. From the lessee perspective, there is only one lease, which is lease, right? So the demarcation or the bifurcation between finance lease and operating lease is not there from the lessee perspective, right? It is only from the lessor perspective. So standard says that the lessee is required to recognize an asset always. Why? Because the lessee is getting a right to use the asset for a long-term purposes. Long-term means 2 years, right? So in this case, lessee will recognize right of use asset in the balance sheet. Lessee will recognize right of use asset in the balance sheet, right? Always. And sir, how the lessee will recognize right of use asset in the balance sheet? On the basis of present value of future lease rentals. Like here, 1, 2. For example, what is the rent? Rent in this case is 1 lakh and 1 lakh. Present value factor, let's say considering the discount rate of 10%, right? So present value factor, sorry, this is 1. Assuming that this rental is paying at the end of the year. So it is 1 divided by 1.1 divided by 1.1. Your present value, this is what it is. This is your total. Accounting entry lessee will pass. ROU asset account debit. Asset debit to lease liability. This is the accounting entry pass on the day one, right? This ROU will be depreciated and the lease liability will be compounded with interest and deducted by paying the rental of 1 lakh every year. So friends, I'm not teaching you here Ind AS 116. You will have a separate class, separate 4 session on Ind AS 116. But right now, what I'm trying to tell you that even if a lessee who has acquired an asset on lease basis, that lessee has to create an asset in the balance sheet. And standard says that Ind AS 116 says that the right of use, the nature of the ROU will be either property, plant and equipment or intangible asset or investment property depending upon the intent or use of that property. Let's say if a lessee who has taken a building on a lease basis, right? And the lessee is subleasing that asset, right? So lessee is earning a rental by way of subleasing that asset. In that case, what happens? In that case, that ROU asset will be classified as an investment property, right? Or a lessee who has taken an asset on a lease basis, but that lessee is using that leasehold premises for the purpose of business, for its office purposes, right? Running its shop, running its office. In that case, then the ROU will be classified as a PPE, right? ROU will be classified as a PPE. Understood? So that's what it is written here. That's what it is written here in the in your PowerPoint presentation. Land and building or land or building which is held by whom? Which is held by land or building which is held by owner. Owner means who have acquired this owner or by the lessee as a right of use asset. By the lessee as a right of use asset. So if a lessee or by the lessee as a right of use asset means the lessee has taken a land or building which is held to earn rental or for capital appreciation. Okay, or for capital appreciation. So in case of a right of use asset, generally this rental purpose was there, generally. Okay, rather than for use in the production or supply or sale in the ordinary course of business. If this lessee is using that building for the purpose of business, in that case, it is not an investment property. It is a PP. Friends, I hope you guys have understood the definition very well. I spent a lot of time here. Is it clear or it is not clear? Is it clear? Completely, clearly? Yeah? Shall I move forward? Good. So these are the examples which you can see which you can see on the screen for investment property. Examples of investment property. Now things will get more clear when I take these examples which is there in the standard. Land held for long-term capital appreciation rather than for short-term. Land held for long-term capital appreciation rather than for short-term sale in the ordinary course of business. If the company is holding a land for long-term capital appreciation rather than for short-term sale in the ordinary course of business, the intent is not to sell in the ordinary course of business. The company is not into the trading of land in the short term. The company is using the land. Company is using the land for the purposes of future capital appreciation in future. The company wants to hold the land for the long-term purposes. Right? Next example. What is the next example? Land held for currently undetermined future use. Currently undetermined future. The company has just purchased the land. So generally what happens, let's say you got to know that DLF is doing a plotting and they are selling this land at a very cheaper cost. The value is very less. So you will buy that land and with the intent of there is no undetermined future use, right? There is not a determined future use. You are not sure. You just purchase the land, but you are not sure that what you are required to do on that thing, right? In that case, that land will also be considered as a investment property. मतलब आपने लैंड खरीद लिया, आपने लैंड खरीद के छोड़ दिया, आपने बोला कि ठीक है फ्यूचर में मुझे बिजनेस करना होगा तो मैं उस लैंड पे अपनी शॉप बना लूंगा, अपना ऑफिस बना लूंगा, बट आपका कोई अनडिटरमाइंड, आपका आज की डेट में देयर इज नो डिटरमाइंड फ्यूचर यूज, और यू टोल्ड कि if possible I will sell also, right? You just bought the land and just holding it. So if the land is held for currently undetermined future use, it will be classified as an investment property, right? Means if an entity has not determined that it will use the land as PPE, owner occupied property means PPE, or for short term sale means inventory, the land is regarded as held for capital appreciation, right? Clear? Is it clear? A building owned by the entity, a building owned by the entity and leased out under one or more operating leases. A company has owned a building and the company is leasing out this building. The company is giving this building on a rent basis. Simple. वो तो है ही. If the building is held for rental purposes, land is held for rental purposes, it is a PP. Sorry, it is an investment property. So कंपनी की अपनी बिल्डिंग है और वो उसको रेंट पे दे रही है. इट इज अ इन्वेस्टमेंट प्रॉपर्टी एग्जांपल. और held by the entity under a lease as a right of use asset, or the company has taken a building on a lease and subleasing it, and the company is giving that building on a sublease basis. A building that is vacant but is held to be leased out under one or more operating leases. In the COVID time, there were a lot of, because people had just went to their places, went to their homes, and in Delhi NCR, in Bangalore, in Mumbai, there were a lot of buildings which was just lying vacant, right? But the intent of that owner is to earn the money by way of rental. It is just that the situation was kind of a situation where the work from home was started, right? And people are working remotely from their home, right, from their places, and that is why those building was lying vacant, but it is held to be rent out under lease basis. Okay, so this is an investment property that is being constructed or developed in future use as an investment property. The company has bought a land and the company is constructing a building on that land, but the intent of this building is to holding for the purpose of rental. Okay, or the company will construct the building and the company will sell this building in future for the purpose of capital appreciation. So in that case, if a land and building is getting developed for future use as an investment property, means rental or capital appreciation, it is also an example of investment property. So these are some example which is given in the standard for the investment property. You let me know if you have any doubt, if you have not understood any of such examples. Please let me know, guys. Please let me know if you have any doubt in any of the example. I hope all the examples are clear in your mind. Examples, not an investment property. Property held for sale in the ordinary course of business. Property held for sale in the ordinary course of business. Of course, it is not an investment property. Property that is leased to another entity under a finance lease. You remember? If you, for example, Viraj is the owner of a building. Okay. And Viraj has given this building to the lessee on a finance lease basis. What does it mean? You remember what is the meaning of finance lease? Finance lease means where the lease arrangement is largely for the life of the asset. Means, let's say the life of this building is 50 years. Viraj has entered into the lease term of 50 years with that lessee. It means the Viraj will not be able to use this building in the lifetime, right? So that lessee will use. But Viraj has already factored this fact, right? And how he has factored this fact? The rental which he is charging, the present value of the lease rental is equal to the market value of that property, right? So he is already charging the rental in such a way that he assumed that this is not a property in my control. I'll not be able to cherish the use of this property. So that lessee will use. So it means technically Viraj has sold this property. Sold means given on finance lease. And in the finance lease, the owner will not show the asset in its books of accounts. Who will show the asset in the books of account? The lessee will show the asset in the books of account. Technically, the lessee is just behaving like a owner in case of a finance lease because he's paying a premium for that, right? The lessor is de-recognizing the asset and recognizing the lease receivables. Okay. The lessor is not recognizing the asset, he is recognizing as a lease receivables. So that is what it is written here. Property which is leased to another entity means property which is given on a rental basis, but that arrangement is a finance lease, right? In that case, even the asset will be de-recognized. The lease receivable will be there. And that's how, if the asset will be de-recognized, then there is no question which arises for the investment property. अगर एसेट ही बुक्स में नहीं होगा फिर तो क्वेश्चन ही राइज नहीं होता ना कि वो पीपीई होगा या इन्वेस्टमेंट प्रॉपर्टी होगा. इट इज नॉट एन इन्वेस्टमेंट प्रॉपर्टी. ऑनर ऑक्यूपाइड प्रॉपर्टी मीन्स अगेन property, plant and equipment, right? If an entity is using that land and building for the business purposes, again it is a PPE. Owner occupied property means PPE, property, plant and equipment. These are the three examples which is given in the standard, which is not an investment property. So inventory is not an investment property, PP is not an investment property, and the property given on finance lease is not an investment property. Raj, do you have any doubts? Munish, Mufita, Mansa, Tanisha. Very good. Owner occupied property is a property held by, property is held for use in the production or supply of goods and services or for administrative purposes and to be used for more than 1 year, right? Owner occupied property means either acquired property or taken on lease. So the company has taken a building on a lease basis and the company is using that building for factory or for office purposes, right? So that is also PPE. Right, guys? So I hope things are clear so far in all the aspect. I hope you understand the meaning of investment property, why this standard is there for investment property, right? So what are the examples of investment property? Do you able to understand that? Friends, now we are discussing that you have a building, there is an asset, right? And asset is partly used for the purpose of earning rental or capital appreciation. And the other part is used for the purpose of business purposes, right? Held for use in the production or supply of goods or services or for administrative purposes. Friends, if I talk about this dual use, right? Dual use. Let's say the company has constructed a building or purchased a building, right? This is a building. In building, there are 3 floors. Floor number 1, floor number 2, floor number 3. All right. The company is using these 2 floors for the purpose of business. For the purpose of business, the company is using these 2 floors for the purpose of business. Okay. BIZ, business. This floor company has given for the rental purposes, for earning rental. This floor the company has given for the purpose of earning rental. Now friends, this is a building. This building has 3 floors, and in the location where this building is there, where this building is located, the company is able to sell the floors even independently. So each floor has its own registry, right? Each floor is having a own legal title, each floor is having a separate registry, independent registry, and each floor has a separate legal title. Okay, right? Each floor has a separate legal title. Friends, in this case, this entire building is having a dual use as a PP as well as an investment property, because this floor number 3, third floor, is used for rental purposes. These two floors are used for business purposes. The standard says that if investment property is held to on rental or for capital appreciation, or some properties comprise the portion that is held to earn rental or capital appreciation, and another portion which is held for use in the production or supply of goods or services or administrative purposes. If these portions could be sold separately or leased out separately under a finance lease, the entity account for the portion separately, right? For example, this entire value of the building is 1 crore. Then the company will split the value, that what is the value of this one floor. For example, the value of third floor is, let's say, 30 lakh rupees. So this 30 lakh rupees will be shown as an investment property. The 60 lakh rupee value of the building, which is floor number 1 and 2, will be shown like a property, plant and equipment, right? So standard says that if the building has a dual use, okay, in that case, if these portions can be segregated, if these portions can be sold separately, okay, they have the separate legal title. If this can be sold separately, in that case, the portion which is used for the rental or capital appreciation has to be shown as investment property. The portion which is held for business purposes has to be shown as a property, plant and equipment, right? Right, friends? Is that clear? Example: OBC Limited owns a building consist of 10 floors. It uses 7 floor as its own office, and remaining 3 are leased out to tenants under operating leases. Under the company's country law, company can liberally transfer the title of individual floors independent of other floors in the building, right? So every floor has a legal title. There is no any problem. If the tomorrow company wants to sell any floor, it can sell. In the given scenario, 7 floors should be classified under Ind AS 16 as PP and the remaining 3 floors as an investment property, since they are able to split the title between the floors. They are able to split the title between the floors, right? Sir, what happens in this example, as you told, that since the legal title is transferable, and that is why 3 floors you are showing as an investment property and the value of the 7 floors you are showing as a PP, you have allocated the value of the entire building between 7 and 3. Okay. Now what happens if the company is not able to sell the legal title of the floors independently? If the company has to sell one floor, the company has to sell the entire building. One floor could not be sold separately. And having said that, still the company is let out the 3 floors separately and 7 floors the company is using for the business purposes. Sir, in that case, what happens? Because you cannot say na कि my 3 floors are investment property. It will not reflect the right picture. Why? Because tomorrow if you want to sell, you will not be able to sell because the legal title is not there. So friends, in that case, if in your question it is written that part of the building is used as a investment property, means for the rental purposes, and part of the building is used for the PPE purposes, so and the portions could not be sold separately, right? In that case, if in the question, if the question say like this, out of 3 floors, 2 floors pertains to business and 1 floor pertains to rental, and like in this case 7 floors pertains to business, 3 floors pertains to rental. In that case, you need to say that these floors cannot be sold independently, and hence the classification in the balance sheet should be as per the significant use of this building. So out of 10 floors, 7 floors are using as a business, so means more than 70% or 70% is getting used as a business. And if the company is using into the business significantly, so there are less chances that the company will sell this building, right? And hence this entire building will be classified as a property, plant and equipment. So you'll go by the significant portion. That what is the significant portion? The significant portion is earning rental, or the significant portion is doing business. If the significant portion is doing business, then the entire building is PPE. If the significant portion is earning rental, entire building is investment property. I hope it is clear to all of you, friends. I have already answered your query. Right? Is that clear, friends? Clear or clear? Is it clear in mind or clear from mind? Clear in mind or clear from mind? Clear in mind. Very good. Okay. So friends, let me show you. Just wait for a minute. Just wait for a minute. I want to show you something. Yes. I hope this balance sheet of PNB Guilds is visible. PNB Guilds, it's a subsidiary of Punjab National Bank. I hope this balance sheet is visible. This annual report of PNB Guilds. It's a NBFC company, right? Can you see this investment property? Yeah, note number 11A, investment property, right? Can you see this? So investment property is shown separately, other than this PP, property, plant and equipment, right? Friends, I hope this annual report is visible and you guys are able to see this classification on the face of the balance sheet, right? Okay, let's move on. So we discussed this dual use and able to split means the legal title for the separate floors are there. Dual use and the property is unable to split. Dual use and unable to split, right? If the portions could not be sold separately, if the portions could not be sold separately, It means legal title is not there for the separate floors. This entire building has to be sold as one unit only. The property is investment property only if an insignificant portion is held for use in production or supply of goods or services. It says that if the significant portion is used as an investment property, then it is an investment property. If significant portion is used as for the business purposes, then it will be classified as a PP. The entire building will be classified as a PP. Simple. You need to see what portion is significant. Right? This part we have understood. Let's move on to the next part. Ancillary services. Sir, we understood that, if a land or building is held for earning rental or capital appreciation, it is an investment property. We understood that. Sir, what about ancillary services? For example, hotel, right? These hotel has a big building like Radisson, your Lemon Tree, JW Marriott, okay, Taj. These are big buildings, right? And they spent thousands of crores and hundreds of crores in the construction of a hotel building. Now, what happens? They used to provide these rooms. They are charging the room rent, and they are selling the rooms to the customers, to the guests. Now, question arises, sir, whether these hotel companies so this hotel building as an investment property or as a property, plant and equipment, right? So what is the classification? What is the classification of this hotel building in the books of the hotel industry? Means where the IHC, this Taj Group company, where this Taj Group company is showing the Taj Hotel building in its books of accounts. Is it an investment property or is it a PPE? Guys, what is that? According to you, what is that? Friends, in the cases where the services are also important and significant, I'll take some example. Real life example. Are you going to the hotel for the services or are you going to the hotel only for the room? Generally, when you use the hotel, when you are living in a hotel, what you will say? उस होटल की सर्विस बहुत अच्छी है. That hotel was very good, right? The service, the staff was very humble, right? The food was very good. The location is very good. The ambience is very good. The rooms are very good, right? All the facilities are there. Okay, all the benefits, all the facilities are there in that hotel. So, right, are you only saying the room rent is good, or are you saying that the room is only good? Yeah. So when you go to hotel, you are not only inside the room, you are using the hotel property. So the hotel providers, right, the entities which are into the hotel business, so only in addition to earning a rental from the room, the entire arrangement as a services is also a very, very, very important. And this service plays a very significant role. Service plays a very significant role. Okay. The companies which are which constructed a building and they are giving this building as a banquet hall. So they are not only selling the place, they are not only giving the place on a rental basis, they are selling the entire services as a package, right? They are saying that you need to get the catering from our side. Okay, we'll do all the decoration. So they are selling a package. They are selling a package. So it means this ancillary services becomes very important. If the ancillary services are very significant, in that case, that property will not be considered as an investment property. That property will be considered as a as a property, plant and equipment, right? So friends, in some cases, an entity provides ancillary services to the occupants of a property it holds. An entity treats such a property as an investment property if the services are insignificant to the arrangement as a whole. An example is when the owner of an office building provides security and maintenance services to the lessee who occupy the building, who occupy the building, right? In other cases, the services provided are significant. For example, if an entity owns and manages a hotel, services provided to the guests are significant to the arrangement as a whole. Okay. Therefore, an owner managed hotel is an owner occupied property rather than an investment property. Okay. You are looking for swimming pool, you are looking for gym, you are looking for club, you are looking for so many things. Likewise, have you heard about Mongolia's? Yeah. So Mongolias are the hot property in the heart of Gurgaon in Golf Course Road. So if I talk about the per square feet rate, let's say the per square feet rate of of this place is, let's say, 50,000 rupees per square feet. And in the same vicinity, or let's say 50,000 rupees or 75,000 rupees per square feet. In the same vicinity, in the other society, the rate is, let's say, 15,000 rupees per square feet. 15,000 rupees or 20,000 rupees, 20,000 rupees per square feet. In the same vicinity, the Mongolia society, the name of the society is Mongolias. So all the high net worth individual lives there. So these are big flats, but I'm talking per square feet rate. It is like a 80,000 rupees or 75,000 rupees. The rate are three times. So if I talk about the construction quality, of course, the construction quality is good, but it is not that the difference will be three times. If I talk about the location, of course, the location is almost same in comparison to this particular society and Mongolia's. So why this society has a per square feet rate of 20,000 and why this society, Mongolia's, have a per square feet rate of 75,000 rupees? Because when you enter into that society is just give you like a resort feeling. A lot of greeneries are there, high security is there, right? And when you enter your car and just went on the porch, right, you will feel like that you reached to the five-star hotel. Okay. So the point is the luxuries, the luxury. So basically the amenities, the facilities, the security. So the facility which have been provided in this society is a world class facility. It's kind of a thing, right? It's kind of a world class facility in terms of every aspect. So if I only concerned about this capital appreciation or rental, I mean to say value of the space, probably the value of the space is not that, but the builder is able to sell this flat at a very high price just because of the facility, just because of the facility this society is providing to the residents, just because of the facility this society is providing to the residents. And this is how things operate, right? When your ancillary services again become very important, it plays a very important role. Nowadays, when you want to go to buy a flat in the society, you know how these typically in Gurgaon I have seen. So how these builders are pitching? These builders are pitching that with the flat we are giving you 100 services, park, pool, badminton, squash, gymnasium, club, right? So they are cricket, badminton court. So they are saying that we are giving 100 services, yoga, your jogging park. So they are just counting 100 services. So again, if this builder is giving you 100 services, in that case, it becomes very important, and the value of that and the value of that society is increased, just not because of the value of that asset, value of that flat, but just because of these services, right? So friends, in some cases, if the entity provides the ancillary services as well, in that case, if the ancillary services is significant to the arrangement as a whole, right? Then that asset, that property will become a property, plant and equipment rather than the investment property. I hope you guys have understood this, right? Any doubt here? Any doubt? Or everything is clear? Clear? Very good. So like hotel, so all the hotel companies are showing their hotel building in their balance sheet as a PPE, property, plant and equipment. Recognition. Again, investment property should be recognized as an asset when two conditions will be satisfied. Same like PPFC. Future economic benefit is probable and cost can be measured reliably. Same cut copy paste of PP recognition condition. Future economic benefit is probable and cost can be measured reliably. A company has purchased a land. Okay. A company has purchased a land. And company has purchased that land for the purpose of capital appreciation. When the company bought the land, after 2 months, government has banned the trading of that land in that particular area. Why? Because the government has declared that area as a cantonment area, as an army area. So government said that no, you cannot construct your house on that land. You cannot do anything. So okay, we'll give you compensation, but the answer is no. After 2 months. So will it be classified as investment property? Answer is why? Because it is not held for rental or capital appreciation. You cannot hold for rental or capital appreciation, right? Is that clear? So friends, you need to recognize that property as an investment property if the future economic benefit is probable and cost can be measured reliably. Right? Same thing, same condition we read in Ind AS 16. Friends, let me tell you, if you will read Ind AS 16, Ind AS 38 and Ind AS 40 as a package, right? Every time you will find that, you are doing a revision of the earlier standard. The 50% concept is same in investment property, which we have read in Ind AS 16, right? The 40-50% concept is same. Okay. Like PP, investment property is also measured at cost, right? Including transaction cost, of course. It has to be measured at cost, right? Cost plus directly attributable taxes. For example, if a company has purchased a building, of course, price of the building plus agent commission, brokerage, stamp duty. So these all are capitalized as a part of the cost of the building. Such costs should not include startup cost, right? Abnormal waste, initial operating losses. We have also discussed in PPE standard that, if the company has invited Mr. Amitabh Bachchan to inaugurate that building, right? Inaugurate that building. So again, this kind of cost is not going to be capitalized. Abnormal losses. While doing the construction of the building, 100 bags of cement get stolen, right? Or there was a labor strike, and due to which the company had a loss of, let's say, 5 crore rupees. So that is an abnormal waste. It will not form part of investment property. It will go to P&L. Initial operating losses incurred. If the company has any initial operating losses, that will also recognize in the P&L. It will not form part of your investment property. Right, friends? So initial recognition and measurement, initial recognition and subsequent recognition, same condition. Future economic benefit probable cost can be measured reliably and initially measured at cost. What is subsequent measurement? Friends, in investment property, revaluation model is not there, right? Why, sir? Investment property by its nature, right? You have purchased a land and you have purchased for the purpose of capital appreciation, building for the purpose of capital appreciation. Your machine will not appreciate, your car will not appreciate, your aircraft will not appreciate, but your building and land will appreciate by its nature. Of course, it will appreciate. In 99% cases, it will appreciate, right? So, if the revaluation model would have been given, every company started applying revaluation model for this investment property and just increasing its value every time in on the reporting date. So that is why standard says that revaluation model is not allowed for investment property, but since it is an investment, you need to provide the fair value in the notes to accounts, right? So subsequently measured at cost model only, and fair value model is allowed in IFRS, but it is not permitted in Ind AS. We have we have just taken a carve out here. We have taken a carve out here. We have taken a carve out or removal of option here. So revaluation model is allowed in IFRS, but it is not allowed in Ind AS. Okay, we have taken a carve out so that the Indian companies will not, will not recognize this revaluation surplus or reserve every time for those investment properties, right? Is that clear? Sir, if you talk about cost model, which cost model? The same cost model as per Ind AS 16. जो आपने Ind AS 16 में cost model पढ़ा है ना, carrying amount कैसे calculate करते हैं? Carrying amount is equal to cost minus accumulated depreciation minus accumulated impairment, right? Same cost model like Ind AS 16. Even in standard it says that you have to refer Ind AS 16 for the cost model. Right? Same. I have copied the same slide from the Ind AS 16. So this standard says that cost model means measure at cost. Cost model will apply same as of Ind AS 16. Depreciate at every reporting period. Sir, land will depreciate? Answer is no. But sir, building will depreciate? Answer is yes. So if there is a building, it will be depreciating. It will be depreciate. But if there is a land, it will not depreciate. Sir, if the company has acquired the land on a lease basis, let's say for 10 years, so of course the company will recognize the right of use asset. Sir, whether that right of use asset will depreciate? Answer is yes. That right of use asset will depreciate over a period of 10 years, even though this ROU belongs to land. Why? Because for this ROU life is limited, which is 10 years. So depreciated every reporting period. But sir, if the company has purchased the land, in that case, land will not depreciate. If the company has purchased a building, building will depreciate. Impairment testing. Yes, you have to do the impairment testing and you have to see if by any chance, if the fair value or the value, recoverable value of the building or land has gone down, in that case, you have to recognize the impairment. Sir, we understood that revaluation model is not applicable, means you are not required to recognize fair value or replace your cost with fair value. But do you require to disclose the fair value in the notes to accounts? Answer is yes. Standard says that yes, you need to show the fair value in the notes to accounts, right? And you need to show the carrying value in your balance sheet, which is cost minus accumulated appreciation minus accumulated impairment losses is your carrying amount. Right, guys? I hope it is clear. Is that clear to all of you? Is that clear or not clear? I'm not getting any response. Although it is a very simple standard, it is a very small standard. Right? It is not a big standard, it is very small standard. Recognition condition, initial measurement, subsequent measurement is only cost model. There is no revaluation model, no revaluation surplus, nothing. Right? Okay, friends, let's have a 5 minutes break. It's 8:30 now. We'll start at 8:35 with the new concept. And I'll also show you annual report where the fair value disclosure is there for investment property. Am I clearly audible? Yeah. So students, I am sharing the PNB Guild's balance sheet again. And let me show you this note number 11A, right? The disclosure of investment property I'm showing you. And it is 150. Yes. Yes, you can see this note number 11A, right? And like property, plant and equipment, because I told you na that it has to be measured at cost model, and the cost model is same which we have already seen in the property, plant and equipment. I mean to say that you need to give the gross block, accumulated depreciation, then there is a net block. You can see that, right? This is there for building, built up flats. And then in the disclosure aspect, so let me make it more bigger. I hope it is visible now, right? It is clear now. You can see the market value of one Chennai flat is rupees 56 lakh as per valuation dated 29th March. So they did the valuation on 29th March, that is allowed. So जरूरी नहीं है आप 31st मार्च को ही वैल्यूएशन करो, आप महीना 15 दिन 10 दिन आगे पीछे भी वैल्यूएशन कर सकते हो. In the current financial year, both the Bangalore flats were vacated, right? So they have told that they have a flat in Chennai, उसका market value इतना है, Bangalore के flat vacate हो गए. The company purchased these flats for its staff. However, in view of no requirement by the staff member, these were given to PNB employees only for a period of 11 months with 2 or more extension. The valuation of the above flats is done by the registered valuer, and the valuation model used by the valuers for Chennai flat is composite rate method. So they have told that first of all, they have given the market valuation, then they have given that first of all market valuation, then they have said that this valuation is by the registered valuers, and what valuation model has been used, they have also given the valuation model as well. Clear? I hope it is clear to all of you. So this is what the explanation or the disclosure in the notes to accounts is there. Right, friends? Now we arrived at an important part of transfers to or from investment property. Right? Transfers to or from investment property. Any doubt, friends, so far? Any doubt? To make you guys understand the transfer to or from investment property, I'll use the Excel file. And please confirm if my Excel file is visible. Accounting treatment in case of transfers from investment property to other assets. To other assets. A Limited has purchased a building held for rental purposes on 1st April 2020 for rupees 50 lakhs. The life is 50 years. On 1st October On 1st October 2021, the company decided to start business of selling of properties and wants to sell this building building as well to the customer to the customer. So friends, this company has purchased the building for rental purposes on 1st April 20. So when this company has purchased a building on 1st April 20, it was an investment property, right? And life is 50 years. But on 1st October 2021, that is after 1.5 years, the business model of this entity had changed. The business model of this entity had changed, and now this entity wants to start the business of trading of flats, of trading of properties. And this company wants to sell this building also in the ordinary course of business. So now the point here is from 1st April 2020 to 30th September 2021, this building status is investment property, right? Investment property. But from 1st October, what is the nature of this building? From 1st October, what is the classification of this building? Tell me. Is it an investment property? It is no more an investment property. What is the classification of this building? From 1st October 2021, it will become an inventory. It will become an inventory. It will become an inventory. Now the question arises, sir, it is getting transfer from investment property to inventory. Now what is the value? What is the value of transferring this investment property to inventory? In that case, the standard says that in case of transfer, right, the carrying value value of investment property will become the opening value of inventory, right? What is the accounting entry? Let's discuss the accounting entry one by one. 1st April 2020. What is the accounting entry on 1st April 2020? Investment property building account debit. Investment property building account debit to investment property building account debit to what? Investment property building account debit to bank account. Simple. How much? 50 lakh. 1, 2, 3, 4, 5. Right? 31st March 2021. What accounting entry will pass? Depreciation. You will pass the depreciation also. No, it is a building. Depreciation on investment property account debit, because the accounting model is same. It's same like a PPE cost model. To accumulated depreciation, or I can say that accumulated depreciation or investment property, whatever. What is the 1 year depreciation? 50 lakh divided by 50. Right? Then what to do? 1st October. Tell me, what is the accounting entry on 1st October? What is the accounting entry on 1st October? Guys, I'm waiting. I'm waiting for your response. What is the accounting entry on 1st October? On 1st October means When it become an inventory, you need to compute the carrying value of the PPE. Sorry, investment property. You need to compute the carrying value of investment property. How to compute the carrying value? You have to deduct depreciation. So 6 month depreciation, you need to charge 6 month depreciation as well. So instead, I'll write here as a 30th September 2021, right? Again, same entry. Depreciation to accumulated depreciation. How much? It is for half year. Full year it is 1 lakh, then half year. 6 month depreciation. So now what is your carrying value? What is your carrying value? What is your carrying value of investment property as at 1st October or as at 30th September, whatever. As at 30th September 2021. It is how much? 50 lakh minus, it is how much? 50 lakh minus 1 lakh minus 1 lakh minus 50,000. 48 lakh 50,000. So what is the accounting entry on 1st October? Inventory account debit. Inventory account debit to investment property account. To investment property building account, right? Okay. Debit, credit. Value is 48 lakh 50,000. Simple. Simple. Any problem? Any doubt? Very simple. Yeah. Same example. Let's say same example. A Limited has purchased a building held for rental purposes on 1st April for 50 lakh. Life is 50 years. On 1st October 21, the company decided to use this building for office purposes for its business. Tell me what to do now. In this case, from 1st April to 30th September 21, this is an investment property. From 1st October 21, what is the classification? What is the classification from 1st October 2021? It will become very good. It will become PP. It will become PP. Property, plant and equipment. Right. It will become property, plant and equipment. Again, in case of transfer, carrying value of IP will become the opening value of PPE. It will become the opening value. Same accounting entries, right? यहाँ तक तो सेम ही होगी ना बिल्कुल. Same accounting entry will be there. You have purchased the investment property, depreciation, you have charged the depreciation, and you have computed the carrying value on the date of transfer. Okay. So everything is same. Everything is cut, copy, paste. Okay. The value of the carrying value of the investment property is 50 lakh minus 1 lakh minus 50,000. Then what is the last entry on 1st October? What is the last entry on 1st October? Here, instead of inventory account, it should be PP account. Right? Well, guys, any problem? Any doubt? Is that clear? Is that clear? Sir, we understood that if investment property, the use of the investment property is changing, the classification will also change, right? And on the date of transfer, when this investment property is moving to PP or moving to inventory, so in that date, on the date of transfer, the closing value of the investment property will become the opening value of the PPE or opening value of the inventory, right? So till that date, you need to compute the depreciation. You need to assess the impairment from the investment property standard, and after that, you will apply your inventory or PPE standard, right? But for arriving at the opening value of the PPE or inventory, you need to compute the carrying value of the or closing value of the investment property. Now we will discuss vice versa. Vice versa. Accounting treatment in case of transfer from other assets, transfer from other assets to investment property, other assets to investment, right? And let me give you a thought here. A Limited is in the business of selling the properties in the ordinary course of business, right? In the ordinary course of business. The company has one flat as on let's say 30th September 2021. Cost price of the let me write a land here. Let me write the cost price of the land is rupees 50 lakhs, and NRV and net realizable value is rupees 70 lakhs. Right. On 1st October 2021, the company decided to hold the land for long-term purposes, and will not sell in the short. Friends, so if I talk about on 30th September 2021, so this land was acquired, let's say 2 years, 3 years, 5 years back. So I'm not talking about that. So on 30th September 2021, what is the classification of this land on 30th September 2021? Classification is what? Sorry, inventory. On 1st October 2021, what happened? It became an investment property, right? Now the question arises that what will be the value of this investment property? Standard says that in case of transfer, the carrying value of in case of transfer, the carrying value of inventory will become the opening value of investment property. Now in this case, as per Ind AS 2, inventories are measured at lower of cost or NRV, net realizable value. Right. So let's say, just for the sake of understanding, I'll write here 45 lakh. Right. Probably the company has purchased the land recently, and the company has also paid stamp duty. And as of now, the price has not significantly improved. Right. So if the company will go and sell this land right away, so of course the company has to pay again some taxes, and the net realizable value has gone down by 5 lakh rupees. Net realizable value. Okay. Because net realizable value is your market value minus minus cost of transfer. Okay. So in this case, in this case, what accounting entry will pass on 30th September 2021? On 30th September 2021, you have to apply the inventory standard. Accounting entries, impairment, loss on inventory, which is land, debit, 2. Impairment loss on inventory, land account debit, 2. To what? To inventory. By how much? By what amount? 50 lakh minus 45 lakh, 5 lakh. 5 लाख से होगा ना, 5 lakh. Okay. Impairment loss on inventory, land account debit to inventory 5. On 1st October 2021, what happened? On 1st October 2021, your investment property will be debited. Property debit. Your inventory will be credited. By what amount? 50 lakh का था, minus 5 का आपने impairment charge कर दिया, 45 lakh की carrying value. So it will be 45 lakh. Hence, is that clear? So moral of the story is कि जिस डेट पे ट्रांसफर हो रहा है, चाहे वो इन्वेस्टमेंट प्रॉपर्टी से पीपी या इन्वेंट्री में हो रहा है, या पीपी और इन्वेंट्री से इन्वेस्टमेंट प्रॉपर्टी में आ रही है एसेट, सो आपको डेट ऑफ ट्रांसफर पे जो पुरानी एसेट है उसके स्टैंडर्ड के हिसाब से कैरिंग वैल्यू निकालनी. लाइक इंड AS 2 कहता है कि इन्वेंट्री हैज टू बी मेजर्ड एट लोअर ऑफ कॉस्ट और एनआरवी. दैट इज व्हाई वी हैव जस्ट केप्ट दिस इन्वेंट्री एट एनआरवी. तो इन्वेंट्री की वैल्यू कितनी हो गई? कैरिंग वैल्यू ऑफ इन्वेंट्री इज दिस डेट, is 45 lakh. Right? Clear? Friends, I hope you guys have understood this. So I have explained with the accounting entry as well. Right? I hope you guys have understood this. Yes or no? Yes? Very good. So we discussed this, that if it is getting transferred from PPE to investment property, again it is at carrying value, right? And how to arrive at carrying value? You have to apply that respective standard. From inventory to investment property, again carrying value. From investment property to PP, carrying value. From investment property to inventory, carrying value. So this is what you have to do. Simple. Right? So this part we have already covered, but let's do this quickly. This case study. PQR Limited owns a building which it has been using as a head office. Means it was a PP. In order to reduce the cost, on 30th September 2016, it moved its head office functions to one of its branch and is now letting out its head office. Company was using cost model under Ind AS 16, means cost minus accumulated depreciation minus accumulated impairment losses. The building had an original cost on 1st April 2010 of rupees 50 lakh and was being depreciated over 25 years, right? So the company is using cost model, and the building was acquired on 1st April 2010. Amount was 50 lakh and life is 25 years. Per year depreciation is is how much? 2 lakh. Okay. And we are talking about 30th September 2016. So 1st April 10 to 31st March 2016, 6 years probably. And then half year, 6.5 years, right? So on 31st March 17, the fair value is also given. So let's see what is the use of this fair value. Show the treatment in accordance of relevant standard in the financial statement as on 31st March 2017. So friends, first of all, what is the original cost of this PP? It was a PP. That is why it is Ind AS 16. It was used for business purposes. So original cost was 50 lakh rupees. Depreciation up to 31st March 2016, 6-year depreciation at the rate of 2 lakh, 12 lakh rupees. Carrying amount is 38 lakh rupees. Now depreciation for the half year, 50 by 25 into 6 by 12, it's 1 lakh rupees. So carrying amount on 1st October 16 is 37 lakh rupees, right? 37 lakh. So now this 37 lakh needs to be transferred to the investment property. Transfer to the investment property. Okay. Clear? So transfer to investment property 37 lakh on 1st October, right? On 1st October. Now this question talks about your 31st March 17 books, that how it will be reflected on 31st March 17. Now when it becomes an investment property, you have to again charge a depreciation. It is a building, not a flat. So depreciation for 1st October to 31st March, right? 1 lakh rupees. So carrying amount as on 31st March 2016 is 36 lakh rupees. It is 36 lakh rupees. Okay. Is that clear? So building, what is the accounting entry on 1st October? Building investment property debit to building PP credit, right? And then for the next half year, we need to compute the depreciation. And what is the use of this 40 lakh of fair value? PQR Limited required to disclose the fair value of the investment property being rupees 40 lakh on 31st March 2017. The use of the fair value is what? The fair value is used for the purpose of disclosure in the notes to accounts. Now I have a question here. Let's say if the fair value of this investment property has gone down to 35 lakh, then what will be the impact? Of course, you will show the disclosure. Disclosure में तो आएगा कि fair value 35 lakh हो गई है. Do we have any accounting impact? Do we need to take any accounting entry on 31st March 17? What is the meaning of cost model when you are carrying this investment property value in the balance sheet? What is the meaning of cost model? Cost minus original cost minus accumulated depreciation minus accumulated impairment losses. So Abdul has rightly mentioned, sir, there is an impairment loss. Friends, after computing the depreciation, your value of investment property comes at 36 lakh rupees. But your recoverable value is only 35 lakh rupees. So don't you think there is an impairment? Yes, there is an impairment. And you need to take an impairment. When the value is high, you are not taking that value. Why? Because revaluation model is not allowed. But when the value is declining, you need to charge the impairment. Munish, it is not 2 lakh. What is the value of your investment property after depreciation on the reporting date? I am talking about 31st March 17. So the value of the investment property on 31st March 17 is 36 lakh. Why? Because 1 lakh depreciation has been charged for a period from October to March, right? As an investment property. So 36 lakh is the value after depreciation, but market value is fair value is 35 lakh. It means 1 lakh rupees depreciation needs to be charged. You need to pass an accounting entry, impairment loss P&L account debit to investment property account, right? You need to pass this accounting entry. I hope it is clear to all of you guys. I hope it is clear to everyone. Is that clear to everyone? Right? Do you have any doubt in this case study? Do you have any doubt in this case study? Now we have reached to the last part, which is derecognition. And of course, when you will derecognize your investment property, You purchased a plot of land 10 years back and now you have sold out. So you have disposed of, you have to derecognize, you have to credit your investment property in debit bank. Simple. But while debiting and crediting means you are getting money and you are selling your asset. So if there is a gain, where the gain will go? The gain will go in the profit and loss account, right? Or, or will you derecognize your investment property only when you will dispose of? Answer is no. If the use is changed, if the company is permanently withdrawn from use and no future economic benefit expected, right, through disposal. So if it is moved from investment property to PP or inventory, again it is a case of derecognition. You have to derecognize, you have to credit investment property and you have to debit the respective asset, which could be your PP, which could be your inventory, right? So this is the case of derecognition. Okay. Disclosure requirement. Now there are so many disclosure requirement, accounting policy, criteria used to distinguish investment property from PPE and held for sale property. Fair value of investment property is going to be disclosed. If that investment property is earning a rental income, it has to be disclosed separately, right, in the notes to accounts. Direct expenses that generated rental income, direct expenses that do not generate rental income. Existence and amount of restriction on the realizability of investment property, right? If there is any restrictions on the realizability investment property, like the property cannot be sold separately, independently. So these all kind of disclosures are there. Okay. So let's recap quickly, friends. So we discussed that why this investment property is given as a separate standard. So I'm just doing a recap in the next 2 to 3 minutes. And I would request all of you that please listen me carefully. And if you have any doubt, any question, then I would be happy to answer that question. Okay. Investment property means investment in property. And when I say property, it is land and building, which is held for rental or capital appreciation. Okay. As an owner, if you have purchased the land and building, it will be your investment property. Or as a lessee, if you have taken a land and building on lease, again it will be your investment property, provided as an owner or as an lessee. The objective should be always two. Two means either of the two, either rental purposes or held for capital appreciation purposes, right? Clear? So this is the definition. Examples of investment property could be if the investment property means land and building is lying idle and the company is not sure about the use, whether it will sell, it will use as its office, or it will use for rental. The company is not sure. In that case, till the time company is not sure, it has to be shown as an investment property, right? Or the company has decided in the future it will use as an investment property, then even in the current it has to be shown as an investment property. Or the company is actually using it for earning rental, then it is an investment property. Or the company has purchased and just lying it idle for the purpose, for the sake of capital appreciation, it is an investment property. Okay. Investment property will be recognized when the future economic benefit is probable and cost can be measured reliably. Investment property are initially measured at cost. Cost means purchase price, right? Plus non-refundable taxes minus discount and rebates plus directly attributable cost, right? Abnormal wastages are not a cost. Okay, your administrative costs are not a cost which has to be capitalized as an investment property. Investment property has to be subsequently measured at cost model, means revaluation model. Fair value model is not allowed. This fair value model is allowed in IFRS, but we have taken a carve out. It is not allowed in Ind AS. So basically, but we being an investment property, we need to show the fair value of the investment property in the notes to accounts. Okay. And what is cost model? It is cut, copy, paste of Ind AS 16. Under the cost model, investment property has to be treated just like a property, plant and equipment, right? Then there is a concept of transfers when the asset is getting transferred from investment property to PP or inventory, or from PP or inventory to investment property. When the assets are changing colors on the basis of the use of the asset. In that case, either from investment property to other standard or other standard to investment property, the transfer has to be taken as per the carrying value. Means the opening value of the new asset will become the carrying value of the carrying value of the old asset will become the opening value of the new asset, right? So this is what we have discussed in investment property standard. Friends, if you have any doubt, if you have any question, I would be happy to answer that question. Do you have any doubt? Difference, investment property measurement. So in between IFRS and Ind AS, I have told you the difference. In IAS, fair value model is allowed. Subsequently, the company can recognize the investment property, measure the investment property at fair value. But in Ind AS, this fair value option is not there. Friends, now I have some questions. Quickly, we'll do this question. Which of the following is not an example of investment property? Now, I would be able to understand whether you guys are able to understand this standard or not. Which of the following is not an example of investment property? Land held for undetermined future use. This is an example of investment property. Property leased to another entity means property given on rental. Under a finance lease. Under a finance lease. Is it an investment property? Under a finance lease. Is it an investment property? Munish has a very good question. Munish is asking, sir, if PP is on revaluation model, then investment property value will be cost or revaluation. In that case, I have used the word carrying value. So Munish, now I am asking to you, if the company has opted the revaluation model, then what is the carrying value? The carrying value is the revalued amount minus subsequent depreciation minus subsequent impairment. So carrying value means the value at which the asset is carried in the books. In that case, whatever is the value after revaluation, it will become the opening value of investment property. Right, Munish? So in this case, when the property is transferred under a finance lease, it is no more an asset in the books of the lessor. Means मेरी तो book में ही नहीं है तो मैं investment property कहाँ से दिखाऊंगा, right? So this is not a case of investment. Property leased under an operating lease. Yes, it is an investment property. Property being constructed for future use as an investment property. Yes, it is an investment property. So the right answer is B. Okay. B is the right answer. B is not an example of investment. Question number 2. An investment property should initially be measured at market value, fair value, net realizable value, cost. What is the right answer? I'm sure that everyone will write. Everyone will write the right answer. I know that. Yes, it has to be measured at cost. It has to be measured at cost. Question number 3. If an entity uses part of a building for their own use and rents the remainder, how should this be treated? If an entity uses part of a building for their own use and rents the remainder, right? So partly for the purpose of business premises and partly for the purpose of renting purposes, how should this be treated? All as investment property under Ind AS 40 or account for separately under Ind AS 16 PP and equipment and Ind AS 40 investment property. All under Ind AS 16 PP, none of these. I have told you that if there is a dual use, then you need to see if it can be sold separately. Then of course the separate portion will be classified as separately as a Ind AS 16 and Ind AS 40. But if there is a dual use but it is not able to separate separately, in that case whatever significant use is there, that will lead the classification. For example, significant use is business purpose, it will lead the classification, PPE will be there. But in this case, nothing is given. So now you have to give the answer. So the correct answer is account for separately, right? Is the correct answer. Next question. Entity using cost model for investment property must also disclose the fair value of the investment property. Entity are using the cost model, whether they will disclose or not disclose the investment property. Yes, it will disclose. True. Question number 5. Investment property after recognition should be measured at cost or fair value model, cost model, net realizable value. What is the model for subsequent recognition, subsequent measurement? What is the model? Yes, cost model is there. Answer is C, cost model. So now this is your favorite slide. Thank you so much, friends. And do let me know if you have any question. Rahul is saying, sir, can you please explain the ancillary part again? So friends, when the company is, the company is giving the property on a rental basis, and rental is not only the criteria, the rental is not the sole thing. The sole thing is the service, right? So there are significant services, there are ancillary services which is attached to providing the space. Okay. In that case, this if this ancillary services are significant, right? In that case, the entire arrangement has to be seen as a single arrangement. The entire arrangement has to be seen as a single arrangement, and in this case, it has to be treated as a property, plant, and equipment. If the services part are significant, if the services part are not significant, for example, you are buying a flat and the builder is only giving you a security in terms of just two security guard are there. That's all. No any facility, nothing is there. You must have seen RWA. Have you seen the societies? I'm not talking about those big society, high-rise society sectors where there are flats. There is a line of flats. Like, let me show you. There is a one line of flat, and there is the another line of flat in front, and just at this point and this point there is a gate. At this point and this point there is a gate, and this is a road. This is a road, right? This is a road. So in this case, friends, in this case, what happens in this case? Only this and this gate is there, so only security is there in terms of just, what they will do, they will shut the door, they will close the gate in the night. So that's the only thing. So in this case, the service is not significant, right? If the service is not significant, so if myself as a owner of this building is letting out this building, if myself as a owner of this building is letting out this building, right, is letting out this building to the tenant, and also the security is provided, but the security is not significant. So in this case, of course, it will be a investment property. But if I am letting out this floor and I am giving him the gymnasium, club, pool, securities, multiple significant services are there. So my rental is not seen as a rental. I am charging him for the rental as well as the services. I am selling like an entire package. Probably in that case, if I am into the business of this, it will be classified as a property, plant, and equipment. The right example is the hotel properties. Okay. Right example is the hotel properties. Right, friends? So friends, I have completed this session. I have also recapped this entire session, right? And I would say that you guys have a good understanding on Ind AS 40. And most of you guys have given the right answer for the 5 objective type question. So I hope you enjoyed the session, and I hope you have understood all the concepts relating to investment property and how this investment property is different from other investment, right? The answer is hidden in the name itself. It is investment in property. When I say property, it is land and building or land or building. Thank you so much and have a good day. Right. Bye bye. Take care.